Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to EVE news this week, we of course have to start with the new Plex for Good drive that CCP has opened up. So this one is for the terrible earthquake in Turkey and Syria. If you have the means for that, you can gather enough Plex and you want to donate, all you have to do is send it through a contract to the Plex for Good character and CCP will do the rest. Of course, absolutely no scamming or anything like that allowed around a Plex for Good drive from CCP. Another bit of news that I wanted to mention is that I saw on the website an article about factional warfare dashboards where the top contributors, even individual characters, get a nice spot. That's pretty interesting. I thought it looks pretty cool, although I do hope that eventually it might find its way to the agency as well. I don't really like to have to do stuff out of clients personally, but it is cool, and for me it's also a sign that CCP is working hard on their next phase for content when it comes to factional warfare, the next patches, which of course should be centered around the allegiance system. I mean, it's gonna get another name, but I'm still calling it the allegiance system, where basically anyone can partake in factional warfare activities for the faction of their choice without necessarily having to be within a factional warfare corporation or alliance. So to me that sounds pretty cool, and it just gives us an extra goal that we can potentially set with those new dashboards that have leaderboards and things like that. So it's pretty cool. CCP is clearly working hard on factional warfare. And then the last news item is that CCP gave us a little bit of information on what's coming for FanFest, so just take a look on the EVE Online website if you're curious yourself. I myself am still not sure what I'm going to do. I mean, it is the 20th year for EVE Online, so it's bound to be a pretty damn unique FanFest, I think, but work is really crazy for me at the moment, and I'm really not sure how it's going to shape up after the summer, so it's just too far in the future for me to know what I'm going to do. Next up, we'll take a quick look at the New Eden store, of course, as we always do, to see what's happening here. So for the New Eden store, we still have a sale that's showing up here for 6-month Omega with a Vindicator skin bundle, and same thing with 12-month and a Nightmare skin bundle, so you do get something extra, I believe it is, for purchasing these bundles, and they're showing up here in the services. Other than that, no new skins or anything like that. Yeah, alright, you still have the occasion to get a little bit extra for your subscription to the New Eden store. So let's dive into the market then. As always, we start with the pilot services. That's coming in at 3 minutes. 300, there we go, and we will start with Plex. There we go, price history, and you can see that we are stabilizing for the average price below a 5 million price range. You can also see that the maximum prices go just above that 5 million, and then we're still a ways away from the 4.5 million, but it really does look like we have our new range, very broadly speaking, even when CCP does actions like the sale that happened in the New Eden store. Now, I don't think it was like a very big sale, it was like skin related, but it was still there, it had its impact. We are moving in a 4.5 to 5.5 million range, and when it comes to sellers, we're at, let's go like this, just above 5 million for the sellers, and then buyers are, well, trying to of course open up that spread between sellers and buyers, try to bring the price back down, but there's enough demand to bring us to 4.75 million pretty much, which is of course not that much of a spread. It shows that that 5 million range is basically what the market is settling on at the moment. The Plex drive could have an impact here, because of course if Plex is drained this way, that is a rather unusual and unexpected extra, so that could drive the price up, but I am starting to feel like there's some real resistance to go much higher than 5 million for the sellers. There's just not that much appetite for the market to go to like a 5.5 or a 6 million for Plex at the moment. The multiple pilot train certificates are jumping up to 2 billion though, so that is a little bit unexpected. So we're just shy of 2 billion for the sellers here, 1.7 billion for the buyers, so that's a 300 million almost. It's a little bit less than that, but 300 million spread between sellers and buyers does show a big difference here, but that is because the market is much smaller. But volumes going down here as well, but the average prices are to the seller, so that's really yeah, expensive. Close to the 1-year high point, you are paying 2 billion for a multiple pilot trade certificates. I do think with the 5 million, yeah, 5 million times 500, you are going to pay even more for 30 days plex time. Next up, you have the extractors. Just like for plex, we are stabilizing basically at a range. That seems to be what the market is settling on after, well, a rather difficult and eventful year, I would say, overall. But first of all, of course, we had the changes to the real-life cost of playing EVE Online, subbing to EVE Online, and all of that stuff. Then we had the summer where everyone was talking about the great drought, nothing happening, and then the pretty damn successful, I would say, expansion in November. So definitely a lot happening here over the year, and we are settling here at 500 million, nice round number for skill extractors as well. 500 million, just above that for the sellers, 505, and then 484 million for the buyers. So that again, pretty damn narrow spread. The market is basically deciding, I think, on this new range here. The impact on the injectors then here are the large scale injectors. They have basically actually weathered that storm in a pretty stoic way, I would say. Looking at this chart, we just basically went up when CCP decided to change the real life prices, found a range at around 900 million just after the summer, and since then we have basically been starting to move in a normal market way, up a little, down a little. Here, not exactly too eventful over the last 5-6 months. So large scale injectors though are very expensive. 930 million for the sellers, 880 for the buyers, about 5% in spread, I think. And volume wise, we did lose a little bit from the period when everything was changing right here. So the rush to trade and to take positions when the real life cost went up was definitely there, but we've stabilized on that, and this is still around 2000 large scale injectors being traded on a daily basis. Then if you divide large scale injectors, you get small scale injectors, and in you know, the grand scheme of things, we of course have a very similar chart. We're way up for the year, and we have stabilized in the last 4 months or so at around 190 million. What to me is quite noticeable is that the small scale injectors do have a more wavy pattern that goes up and down a little bit more quickly than the large scale injectors. It is of course a different range, 185 million for the sellers, 175 for the buyers, so that's just a 10 million spread here between sellers and buyers. Very narrow, cutthroat market. And another difference here, you see that the volumes at the start of things last year is basically, actually feels a little bit lower than the volume that we've got at the moment. It is at least similar, so it is its own little market, and it definitely provides some unique opportunities even compared to the large scale injectors. Then we have the daily alpha injectors right here, and well, there we go. It's very, very interesting. To me, it's also quite telling though that we are in a different paradigm, a different CCP here, but we spent about 2-3 weeks above 50 million for the daily alpha injectors, and you can see that CCP came out with a sale. A couple of days of double volumes, bringing the price back down towards that 40 million range. 44 million for the sellers, 41 million for the buyers. So while it is never a guarantee for future decisions from CCP, this is clearly not the third, although it's the third time in the last year, but a pattern that is starting to show up. I think before here we had a couple of these as well, that CCP is definitely willing to intervene in the daily alpha injector market. My speculation is that this is actually a very useful hook for alpha players to keep setting themselves a goal on a daily basis, keep coming back, logging into EVE Online, try to earn that 40-50 million in a day. A little bit of luck with exploration or some pretty hefty grinding can definitely get you there, and they don't want this to become something that's just not achievable. They don't want 50 plus 60, 70 million to be on the books for a daily alpha injector. That is just going to mean a lot of alpha players that can't really set that goal anymore, and so they are willing to intervene here like a central bank basically. And that means that we have potentially, again, I do have to warn you guys that CCP can cut us off at any time, but this potentially does mean that you have a predictable trade here, basically a central bank trade, because now you can buy close to 40 million, and it is almost inevitable that eventually these prices will go back to a price above 50 million, and then of course you gotta sell soon enough. But you know, 25% on what has been possible 3 times over the last month, and then you also have that crazy late summer here up to 70 million, but 3 rather predictable trades, right? If you buy here, or if you buy here, or now if you buy here, potentially I should say 3 predictable trades where you can buy close to 40 million, sell above 50, buy close to 40, sell well above 50, and then the same thing happening here at the moment. You could have sold here as well. So very interesting, and actually came a little bit sooner than what I thought. And my message here in general, we are starting to see it here perhaps as well, is that if CCP wants to keep doing this, they are going to have to intervene more and more often, partly probably because of what I'm doing right here, and other players noticing this pattern and deciding that this is a way to make ISK. Thank you, CCP. They're gonna have to just do this more and more quickly. That's almost inevitable, that they have to pump up the numbers of their interventions as this becomes something that more and more players notice. But also, you know, inflationary, everything else going up, like you can see for instance here for Plex. This is what Plex has done over the year. To keep the daily alpha injectors in a 40-50 million range is going to take ever more effort, considering that inflation is a reality in a game economy. So it's very interesting, but it is here. It was sort of predicted, I think, I would say during my EVE talks. So your decision, guys, although taking advantage of this is just going to make the problem worse and worse, and going to force CCP to make a hard decision all the sooner. It is potentially a very predictable trade, of course, where basically CCP is now giving you the in, and eventually the market is going to give you the out. So it's very interesting in my book. Finally, we've got the hypercores that also, of course, show that inflation, or that the changes that CCP has done as well to real life costs of things, did go to a 1-year high point and then is recovering from that. Basically, I would say again, settling to the new range that the market is deciding is where we're going to start off from here, around 500,000 ISK. 509 for the sellers, 490 for the buyers. Again, very narrow spread. So for pilot services, pretty interesting overall. I think we are settling down. Market is waiting for, well, what are the patches for the first quarter? What's that other expansion that CCP has announced? What's it looking like for FanFest? For me as well. What about that shooter? Are we going to get that around the 20 years of EVE Online? It would be a crazy market stunt, but it could create the hype that you need to launch something successfully. So I do think that there is a lot of stuff potentially happening this year, but we all know that it's not that easy. CCP is not a huge studio and does tend to take its time as well. So we'll have to wait and see, but we're definitely in an interesting spot in my opinion. Next up, we have the minerals, 1325. There we go. Let's get started on this one. So we have titanium. We have seen that on the ticker as well, down a tiny little bit on the week, but basically stabilizing here as well, staying above the 4 ISK. I think that's pretty important for anyone that's mining in HiSec, and we gotta go for sellers in GDA on this one. 413 to 406, a very narrow spread, but apparently plenty of supply as well, even at these generally low prices, I would say, compared to at least the last couple of months. So either things are slowing down, or there is just too much supply on more activity in general in the game. It is absolutely possible. We we are in the winter time tends to be a high point for activity. And so here I think we can be happy with 4 ISK, but as I've said, I think in the last couple of weeks I am definitely considering like a 50-50 approach on anything that I would be producing at the moment. Here we've got pyrite. All right, same story. You can see how we went down, lost the 11 ISK, then lost the 10.5, and now we are above 10, and we're finally starting to stabilize here as well, going up and down a little bit. 10.22 for the sellers, just below 10 at 9.97 for the buyers. So they are already trying to bring us to that new reality. We get a little bit of time left here, but the pressure is undeniable here as well. So I can understand anyone that decides to just sell anything that they're making as well. But again, I would go on a 50-50 approach and hope that eventually an 11-12 is possible on, for instance, the faction warfare patch. Maybe that creates more destruction or something happening in Nullsec, of course. Then for Isaac, we still have the Mexalon chart that unfortunately is below the 60, but is apparently stabilizing here as well in the last week or so. So selling at 57.62, 52.68. I would say that the minimum prices are still going down. So buyers still trying to drive the price of Mexalon down, and now we're clearly below the average for the year. So high-sec miners are unfortunately losing a little bit of income at the moment due to the market deciding that there's apparently plenty of high-sec minerals on the market. Then we have low-sec. So here is Isogen, super stable in the last 1.5 months, still above the 500. Perhaps in a difficult spot in a holding pattern, because a lot of the others, including Noxium, have been going down. And yeah, doesn't really know which way to go. There might also be a couple of sell orders that are keeping us in check. So here, this first page, right, 3 million, 5 million, all of that is easily absorbable. Then you get a couple at 550, 20 million, 11 million, but still could be pushed through on any indication that we need a little bit more, and you need to go to 650 before you reach a 400 million seller. So I would say no. In general, it seems like the market for Isogen is in a wait-and-see pattern and deciding, well, we're not going to dive too low. There's definitely buyers below 500 ISK, banking on the fact that there are still these big sell orders that are keeping us in check, and the active supply, active demand price should be higher than what it is now. And on the other hand, perhaps demand from the game in general is down a little bit, as there is no rush on buying any Isogen at these, well, at the current prices either. It is basically, I think, a pretty unusual chart to see 1.5 months stable at basically the highest range without like an immediate CCP intervention. This little blip here was a CCP intervention where CCP actually increased the available potential supply for Isogen, but market speculators drove the price down to 400, and then the buyers came in, and now looks like those buyers were apparently right. And the speculators that drove the price down here, the desperate sellers, were wrong on this one. So very interesting. I am still in the camp that thinks that these reserves will run out and that we are still too low for active supply, active demand, although at this very moment it looks like it's easily able to maintain the current price range. But yeah, you can bump into like a 20 million order a couple of times, and keep prices in this pattern that way. So then we've got the Noxium chart. There we go, also went down substantially over the last month, stabilizing here at the current price range, which is at 878 for the sellers, so 880 pretty much, and 815 for the buyers. Pretty narrow spread, kind of normal for something coming from low-sec. But yeah, I would say another sign that perhaps the high point here was really November, December, with the expansion, that this is where activity went a little bit crazy, and that we're coming down from that post-expansion high here, settling for cheaper prices as a result. Then for Nullsec, we've got the Zydrine chart that's also settling below the 2000 ISK range here, 1958 to 1945. That's of course a very narrow spread, but that's also normal for a good that has to be imported and is also mostly in the hands of the big Nullsec groups. You have to pay what the sellers demand for this one. So that's in their hands, but clearly also lost a lot in the last couple of months. partly due to the CCP intervention, but probably also partly due to the high point after the expansion being basically mid-December, something like that. And then we've got our mega site that is doing a bit of a counter move, making its way back above 2.5, 2,600 for the sellers, 2,400 for the buyers. A bit more spread, a bit more volatility on this one as well. My theory is that on the one hand, Nullsec doesn't have that as good a monopoly on Megasite. We know that there's quite a bit of it coming from the Pochven region as well, and I think that there are like some wormhole resources and things like that as well where you can grab some Megasite, and so they don't have it in hand as much, which means a little bit of volatility. But what is to me very noticeable as well is that basically order has been restored in the Tech 1 minerals, with Megasite being the most expensive, which I think is also normal when you look at how much Megasite you can potentially get from a cubic meter of ore, from any cubic meter of ore. You do the same thing for Zydrine and you go down the list. Well, Megasite should be the most expensive from that perspective. So here we do have an old hierarchy, which I've known for a pretty long time playing EVE Online, with Tritanium, then it's Pyrite, then it's Mexalon, then it's Isogen, then it's Noxium is more expensive, Zydrine is more expensive after that, and then we get Megasite finally as the most expensive Tech 1 related mineral. It used to be that, for instance, Isogen was below Mexalon, Noxium has been above Zydrine and Megasite, Megasite has been below Zydrine for a long time, and Pyrite has I think even been below Tritanium as well. So we had a crazy period due to the resource bonanza, and then the whole reshuffling, CCP doing that 180, but very, very interesting times here though. Feels to me like we are stabilizing in that hopefully healthy situation. And then finally we've got Morphite. That's of course our Tech 2 mineral that is slowly edging back below 40k. Sellers probably still above that, but only just 40,500, buyers at 39,000. Pretty narrow spread here as well. 40k is the price for Morphite. And as I've said throughout this entire EVE talk, I think we do have to keep something in the back of our mind, is that CCP is now willing to intervene into these markets to keep things in check, basically to keep things healthy, which is very different from, let's say, 5 years ago. Next up we have the PI market, and that's coming in at 2135. There we go. Let's go through the list, and I think I didn't spot any announcements, so I think we're still in the same story. We'll start to see some hesitation again in the minerals. You can also see there some signs that perhaps the furnaces are not burning as brightly, but that could be in part because of what's happening in faction warfare, right? If that hype dies down a little bit, there's all those new ships that need to be produced, and it is possible that in Nullsec that the arms race for large ships, for capitals and supers, is still ongoing, and that's for instance what broadcast notes tell me, because we are basically again at a 1 year high point, just shy of 2.5 million for the sellers and then 2.4 million for the buyers. So despite being at a 1 year high point range, the most expensive we've had it over the last year, we still have that very narrow spread that does show pretty damn strong demand for me. But then at least that was the case last week. When we go down a little bit, we do see a slightly different story. Still, here you can see that construction blocks is already working on its comeback to 10k average, 10,000 for the sellers, 9,000 for the buyers. So we're not diving down to like a new range or anything. Coolants, same story, did get on the 10,000 and is now back at almost 11,000, 10.8 for the sellers and then 10,200 for the buyers. Narrow spread, lots of demand here. Enriched uranium also settling at 10,000, but after going down a little bit, healthily above that for the average prices. 10,670, basically 10,000 disc for the buyers as well. And then when you go to the advanced PI materials, those closest to the production of large ships, yeah, you get this pattern. Integrity response drones just shy of 3 million, sellers 2.9 million, really narrow spread at the highest point of the year and of the chart. Definitely again here that same warning, although I was successful in predicting what would happen in the daily alpha injectors so far here, maybe not, but to me This is something that I can't imagine CCP isn't aware of this and isn't keeping an eye on things and is potentially making plans to curb this, because this is really counter to the one philosophy that I really remember, is that CCP wants flying in space to actually have value, and PI is one of the most passive ways to bring stuff into the game, which is at crazy high values at the moment, I would say. So I am selling again any PI that I'm making as quickly as possible, because I do think that yeah, these are great times, but they may not last forever. So mechanical parts again here touch 10k and then bounces right back on demand, almost 12,000 for the sellers. Really good price. The buyers have a little bit more patience now, so they're not forced into those crazy prices either, but it's clear that we are still in a pretty strong bull market, I believe it's called. I'm not a professional trader or anything like that in real life, so I will make mistakes in terms, but 16,000 here almost for miniature electronics, 14,000 for the buyers. Yeah, a bit of spread that opens up here, but you can clearly see that any downwards movement is also spotted by speculators, I think, or investors, that yeah, this is an opportunity, let's buy, and they do drive that price back up. Nano factories for advanced PI material now above 1.25 million. Almost 1.3 buyers at 1.25 million. Look at that, just 25,000. No, 35,000 is in spread on something that costs over $1 million between sellers and buyers. Look at those buyers, just desperate, those minimum prices. You can see here $1 million for a couple of days, and then yeah, we get a follow, and it's just completely obliterating that spread here between sellers and buyers at the highest point of, well, the last 10 months. In this case, we got this one blip here at the start of the year. Organic motor applicators, very same story, 1.17 million to 1.106 million. So that's just a 60,000 disk spread on this one. Recursive computing module, this one went to a 1.5 million high point, is staying well above $1 million though, so I would still say that a 1.1 million to almost 1.1 million shows pretty strong demand. Perhaps a big seller here taking advantage of 1.5 million, triggering a trade is definitely possible, but gives it a little bit of breathing room in this particular material. I think that's probably what happened here. Makes a lot of sense, right? Buy below $1 million, hell, you can buy at 750, get a 100% trade. That's on this 1 year chart here. So I do think that's basically what happened here. But everything else is really needed. Even robotics staying above 90,000, 93 to 91,000 here. Yeah, again, very, very strong demand. Rocket fuel, refined PI 14,000 to 13.5. Self-harmonizing power cores, adding another jump up, now a pronounced 1 year high point and stabilizing here. And then we'll look at the spread right now, 2.7 million to 2.6 million on something that is at the highest point of the year. Really very, very impressive. So this also does mean that I have basically been selling too early. I have to admit that, but I'm not, you know, I'd rather sell too early at a nice profit than too late after CCP brings out the nerf hammer. So for smart fab units here, just we're drying out 150,000 now, and 80,000 for the buyers. They are waiting, but I think here they'll have to capitulate. We'll need to go to a higher price point for smart fab units as well. Sterile conduits is still doing quite well, I would say, at 1.4 to 1.3 million. Supercomputers, another 1 year high point at 130,000. Synthetic oil, another 1 year high point at now 20,000. This is a refined PI material that apparently the market is completely desperate for. There's just 2 sell orders at crazy prices. That's it. And well, you've got data points. Anything that comes in and someone decides like, all right, you know what, I'm gonna ask like 17,000. This could pretty much 70% above a normal price for synthetic oil, and it just gets snagged up right away. Very, very cool to see as well how this dynamic is working at the moment. Synthetic synapses 120,000, so also quite expensive, of course. Transcranial microcontrollers is still above 100k as well. And then water-cooled CPU, all right, this is quite telling as well, I would say. Above 10,000 disk for the sellers, 2.85 for the buyers. So this one was always super cheap, overabundant like crazy, but now we're running out of this as well. 10,000 disk for water-cooled CPU. Haven't seen that in forever. Yeah, it's the normal price range for refined PI materials. I do wonder again what the CCP thinks about all this, because even our wetware mainframes, same pattern I would say. So we get to above 2.5 million, we dive down to 2 million. This is in my opinion profit taking from speculators, traders on these wetware mainframes, but a couple of weeks later we're right back where we started. 2.7, 2.8 million now for the sellers in GDAT, 2.6 million for the buyers. The market is just desperate for PI, and especially advanced PI materials. Very, very cool, of course. If you're a mega and you got lots of PI going on, I think you're living the dream. But that warning again, who knows how long that will last. Next up, advanced moon materials, 29.45. There we go, and here let's get started to just find a pattern, but I think we're basically stabilizing here as well. Crystalline carbonate settling just below 150 for instance, so that's at 148 to 146. Narrow spread, but it does feel like we're not going to go too crazy. For Caldari on the carbide, it's titanium carbide just below 150 as well. 151 to 145, super narrow spread, a little bit higher than what we start the year at, but basically stable here too. Then for Minmatar we have Fernite carbide that, actually, yeah, not, I thought it's be able to stay stable below 150 here as well, but no, we are diving down to a 115 to 112 for the buyers. I must say this is quite the volatility, a little bit unexpected here, but sort of what I was hoping for, but was starting to give up on, is to see some real volatility. Hopefully we can eventually like push above 150 again. That would be really cool, but a big downturn, surprise downturn, at least in my books, for Fernite carbide, back down below 125, and then for Amar, for tungsten carbide, stable below 150 as well. So most of them though very, very stable at basically the new prices that again CCP also was aiming for, I think, when they intervened by nerfing moon mining. At least the output was nerfed by like 25%. For the metamaterials, for Galente, it's photonic metamaterials that is also actually coming back down as well. Back below 10,000 for the sellers, 8,750 for the buyers. So maybe a little bit of oversupply on these higher prices that we've seen for the entire year. That's potentially what's on the books here, and I should really push this one as far as possible. There we go. Then we have the Galente Caldari's non-linear metamaterials also losing a little bit of ground here again, below 12.5, so we are at 11.8 for the sellers, 11.750 for the buyers, so the spreads are really narrow on the market this week. Then we've got Minmatar, which is plasmonic metamaterials, settling at 12.5, also losing a little bit for the week. And then Amar is pretty stable below 15, 13.6, actually the most expensive one here, or looks like the most stable chart here as well. So I would say we have this one little sign, which was for this one, that some volatility might be on the books. Unfortunately, new highs, which is what I'm hoping for, that will then eventually flow through volatility and really nice high points in Tech 2 ships. That doesn't seem to be on the cards just yet. We'll go through the rest of things here, but I think we're stabilizing across the board. So you can see here we're settling at a slightly better price than during the fall slump. Ferrogel also settling, same story here. Then we got Fullerite settling at 700 disk, which is pretty good, basically a full recovery, but we're not moving too much for the last couple of weeks. Hypersynaptic fibers actually doing a bit of a jump, but I don't think it's too crazy. Nano transistors also quite alright. Phenolic composites back below to 1250. So that pressure is here as well. Pressurized oxidizers found its way to 12.5k. I think you can see here we're actually starting to find our minimum and maximum prices as well around this range. Reinforced carbon fiber, same story, stabilizing here. And then ceramic fibers back up a little bit. Yeah, those cheapest ones those closest to the source for the supply nerf that CCP has done do have that, you know, we fully gained, and we even maybe gained a little bit from the year, has a slight bit of volatility, but other than that, I would say the advanced boom materials market has weathered that CCP nerf very nicely, is staying surprisingly stable, at least in my book, and it shows that yeah, CCP basically mentioned what they wanted to do with this: maintain value for moon mining, and then of course everything else down the line as well. And it seems like they've been very, very successful with that targeted nerf. So for Tech 2 ships then, let's go at 34.20. Yeah, difficult to say what you have to do now. I have of course been buying for like the last year or so, I think, at this point, trying to always buy at the bottom prices, so I managed to do that. But if you're looking to jump in, I think we're basically too late. You can see that here on the Basilisk chart, for instance. We're now slowly edging above 150 million, 162 to 150 here for the buyers, and you can see here that over the last year practically, especially this summer, if you bought, you had opportunities to buy below 100 million or very close to that. You're looking at a nice profit, but what's not happening, what's not materializing so far, while the profits are starting to mount on my positions in Tech 2 ships, the volatility isn't there. So you basically, it's all about, it's probably going to be like a one-off trade where I decide, yeah, I'm going to start selling, I'm going to take the profits, and I don't know what we'll do from there in Tech 2, to be honest. So here we've got the Cerberus. You can also see that we're away from the bottom prices, below 130. Very nice jumping points, and now we are at 143 to that 130 million, when before you could have bought like well below that. Then we've got the Curse. Now it's back to 150 and above, 158 to 143. Again, you could have bought these below 130, and I've got several of those. Damnation, 300 million now for a command ship, 310 to 280. Yeah, again, it's basically the same story almost across the board. Where I have the most hope is the smaller ships. So here, for instance, you do have the Deacon that had like 10 days ago, 2 weeks ago, that jumped to 30 million. So there's your sell opportunity. We are coming back down, and we're just too late. So like the last couple of days, probably the best days to jump in on Deacon trades. We're down to 19 million for the sellers, just above 15 million for the buyers. You can also see that today's minimum max prices, yeah, not formed yet, but I would not be surprised if here you had, yeah, the opportunity to really snag some just above 15 million, and that unfortunately, since you can see now that the daily averages are crossing the 20 again, we're probably just too late to jump in. But I would say buy a Deacon below 16 million, and then hope for this. That's still an opportunity for you to do, but in the larger ships, unfortunately, I think you had to take your positions while they were crazily depressed. Here's the Eagle, for instance, back to a 150 million range. Then we get the EOS back to a 300 million range. I mean, I'm going to go through this a little bit more quickly here as well. Ares had a very nice sell opportunity here at 60 million, coming back down, but unfortunately, right, if you wanted to buy Ares, you get that 30 million here throughout pretty much the entire summer, here in December as well. That's the dream, of course. Buy the Ares for 30, sell it for 43 or for 60 million, and unfortunately the 30 million is really not likely to come back into play, unless, I would say, you've got the smallest of ships, the tiny frigates, stealth bombers, these logistics frigates. I think they still have a chance to have that volatility, because oversupply there can create problems. Then we have our one exception, I would still say here, is the Flycatcher, that is still at that same range, 39 now for 36 million. You're buying them well below 37.5 million, but I think by now we have spotted this one quite a couple of times, so if you don't have your Flycatcher yet, you can definitely grab one on the cheap at the moment. I definitely have a few of those. And then you've got our, logistic cruisers, also a couple of ships that I've made very successful trades on, but telling that story that, yeah, those times are over. You could have bought these for 100 million on a couple of occasions. We're at 150 to 130, and, we're just going to find that new range, unfortunately, without the volatility that I was hoping for in advanced movements and here in Tech 2 ships. Interdictors stabilizing at 40 million. You can also see here how those minimum prices are just coming up. and then we get the Hound. That one, you know, look at that again, getting close to that 15. I mean, for me it would be great if I would want to get more of them. I'd want to buy them below 15 million. Unfortunately, that is not very likely to happen. But if you need to, find a trade in Tech 2, I would say here the Hound is looking pretty good to try to jump in still. Then we get the Kitursa, very stable at that 540 to 520. Very narrow spread here. So we keep an eye on these just to get the Triglavian side of the story. And here is then the Ishtar. Again, you could have bought these for less than 130 million. Currently selling at 166 to 150. So you get a nice little profit margin here. But I don't expect a buy opportunity to come back anytime soon. Then we've got the Kirin, still flat at 15, buyers coming in at 14 million. Yeah, again, logistics frigates and stealth bombers I think are still the markets to look at. Here is the Manticore. What are we talking here? 17.5, 16.5. Yeah, it's hard to say, right? We're definitely not on the right side of the chart to jump in. On this one, Nemesis also starting to go back up, but you see it's really slow, and you don't get too many of these sell opportunities like what we got here in November, when we could have sold well above 20 and bought well below 15, for instance. So Nighthawk next year, landing on the 30 million, a little bit of spread opening here, I think 268, but yeah, when you could have bought these below 250, those were the days. The Oneros then doing a full recovery, went back above 180 million, you can clearly see the volumes went up, so we are coming back down from that one, 130 to 120, and this is really going to become unfortunately, I would say again, the name of the game, find the new range for these Tech 2 ships under the current situation. So the bottom is not going to be below 100 million anymore, but is buying below 130. Is that the right time to jump in on the Oneros? Then this would be the time to do so. But you could be wrong here, of course, because it could get closer to a 110 or something like that. It's very difficult in this market to make those decisions. Then we get the Purifier, did go down to close to 15 million for a couple of days. We're now at 21 to 17 million, so a small trade here to be made. But again, my hope was that we would see like a 25, a new high. That would have been the volatility that we could trade on. That is not coming. Then we get the Rook also going back up currently. So buying below 150, selling for 200 million. So sometimes we do run out of them. So here is your Rook sell opportunity. I think I've got one or two of these as well. So yeah, I would understand if people decide to take their profits at this point. Then we get the Saber, 37 to 34. Unfortunately, this one, I don't think that the interdictors are too good for volatility. The Scalpel slowly edging up here, 18 to 13.4 million. But the volumes aren't there, so very risky bet. And then we get the Scimitar settling just below 150. Yeah, we're too late here, or you could sell if you bought at the right time. And then this one is a little bit interesting, I would say. Here is the Sleipnir, made its way well above 350 million, coming back down quite a lot, stabilizing right now. So we're at 276 to 262, so we're just too late again. A couple of days ago, jumping on a Sleipnir, I think it was the right time to do so. Again, that buying below 250, that unfortunately is over. And so this is something that could happen, and I was hoping would become like that rolling potential where you do get a new high, and then you get investors and traders that decide to sell. Too many of them, so you create another sell opportunity, and then we start to climb again, but some more have been taken off the market, so we can make a new high, and then everyone goes crazy again, creates another. That was what I was hoping for, but I do think here that unfortunately, if we can't make a new high again, that this was your sell opportunity, unless like what I'm planning to do here, you're very patient, you're happy with those investments, and I'm basically gonna wait for like something huge to explode in Nosek or something like that, and then to see like an even higher price. I think I'm gonna hold on to most of them unless I see something quite exceptional. Then we get the Vagabond, right? Here is the new range above 150 again, and then the Zarmast is actually doing a couple of tradable moves here as well, back towards the 600 million, 580 for the sellers, 458 for the buyers. That spread is basically tradable right now. Of course, on this side of the chart, very difficult to get the buy order to trigger, but that's interesting. So the Zarmast has 2 sell opportunities in the last month, with jumping points well below 500 million and then selling close to 600 million. All right, well, there we go, guys. Unfortunately, my dream of the Tech2 jitter chart, which we've had on a couple of years, is not coming true. And I would say, if you're happy with the profits that you're seeing, you can definitely start to sell, but know that, in my opinion, you might be waiting a very long time for another trade. Then we got Tech3, 44.20. There we go. As always, we start with the destroyers, and I think the Confessor is moving up still. 51.7 million, 47 million for the sellers, and unfortunately this is what I think is the problem here. You can see how the spread is basically maintained and is even narrowing at the tail end, and now we just, what would that be, 150 or so confessors on the sell markets, and maybe 30 that are wanting to be bought. This market has basically lost interest, and I think it's still that reality that compared to some of the Tech2, although it's better, but compared to some of the Tech2 ships, yeah, their prices went up while Tech2 went down a little bit. So you still have that problem that why would you buy a tactical cruiser, destroyer, excuse me, when you can buy a Tech2 ship? It's just not good enough, I think. Then we get the Hecate also going up to 60 million here for the sellers, but again we get a 59.2 is the first seller, 60 million with 330 ships is the last seller. Very, very unusual situation. Buyers are going up to 57 million on a couple of these, but the volumes are, as a result, just about 100 a day. Not that much. Well, actually 100 a day is quite a lot considering the sell orders here. So this is what's really weird to me. It does feel like the supply is becoming a problem. You get a jackdaw that went above 55 and is coming back down. That's what we're used to, right? You can see that we start here 65, couple crazies at what, 140, but we're at 54 million. You get some supply coming in, and then you get 50 million here for the buyers. Volumes are down a little bit, but not by that much. So I think the jackdaw is still doing okay. And then we get the Zwepel, made its way above 50 as well. Just not enough ships here on the market. So it could just be that the interest even in producing tactical destroyers is starting to be the problem. And then is that an opportunity? I don't know. I still think that CCP perhaps needs to take a look at the tactical destroyer market, maybe from the production cost perspective, maybe from the performance perspective. I don't know. But I know that I haven't flown my jackdaw in quite a while, yeah, compared to what we've seen with Tech2 prices, I think basically it makes sense that these markets are drying up, which could lead to volatility, which could lead to trade potential, but doing so on a dried up market is, I think, quite risky. For the cruisers, let's go on the Legion chart. Try to come back down, but you see we never made it to 180 on the minimum prices, and then we shoot back up to 214 million for the sellers, 190 for the buyers. Also basically not a lot of supply here anymore. For the Legion, quite interesting, close to a 1-year high point at the moment. So if you still have a Legion that you bought below 180 from a couple months ago, you have another even better sell opportunity. Then we've got the Loki, still stable above 200 million as well, 202 to 192. So this feels like it's again stabilizing. That has really been the most common word, I think, for this Eve talk. I'm seeing it in pilot services. We're seeing it in minerals, although they've got some downwards pressure, in advanced movements as well, and now in Tech3 ships, same story here. As you can see how the Proteus is settling at 209 for the sellers, 190 for the buyers, so the spreads are getting quite thin. And then the Tengu is down just a bit, but already coming back up, 198 to 186, so narrow spreads. Very much a stabilization in the market at this point. Very difficult, I think, to to make short-term trades when it comes to all of this. And so I think taking some profits, for instance, on the basilisk off the table and things like that, it does make a lot of sense. But the market is apparently not willing to just keep building on that, to build on that hype or anything like that. We're very careful here, and I think, again, looking at what's gonna come in the next year before making decisions, I think is what's dominating all of this in the market at the moment. We still have an extra product, and for this week we're gonna take a look at faction frigates. It's been a while and we got a couple new ones in there, so could be interesting. 4910. So let's go. We got ships, then we've got frigates, and we usually start with the pirate faction. So let's go through these. The Astero coming down a little bit, still 110 million for a faction frigate is quite expensive. So 113 to 109, very narrow spread again, and less expensive than what it was a couple of months ago, but basically still slightly above average for the year. A crewer, same story, slowly going down in price, and to I would say a reasonable, from this 1 year perspective, 81 million for the sellers, 76 for the buyers. You can see how the average price are actually close to the buyers, so have that patience if you want a crewer. You can definitely try with a buy order at the moment. You can also see that because of, well, daily averages below 20, moving below 5, below the 20, and that for pretty much a month straight. Does mean that there's desperation here and people are willing to sell their crewers to the buyers. Daredevil staying below 100, yeah, just below 100 million for the sellers, 93 million for the buyers. Dramiel our exception so far here, 1 year high point at 111 million, 103 for the buyers, so very expensive Dramiels. Garmer still above 100 as well, but not at a 1 year high point. Very bad chart here for the succubus. I'd say expensive, yeah, 130 million, 125 now for the sellers, 113 for the buyers. If you happen to have a couple of these, you might want to unload, which I actually do in a MAR. I'm not sure what the price is there. And then we get the worm, that's also still expensive. I'd say this is probably performance driven. The worm, I think, is, if I'm not mistaken, missiles and drones, so it has its place in like abyssal content and things like that. So you get your launchers and don't you have, yeah, and you get your 5 small drones. So crazy good little PvE ship right there. So pirate factions, a little bit of a mixed picture here. Some are getting a little bit cheaper. We get a 1 year high point for the Dramiel, and then I would say the potentially popular PvE ones are quite expensive. But then we get Navy faction, and so here we get a couple of new ones, so we'll have some weird charts, I think. But Kaldari Navy Hookbill, quite inexpensive at the moment. 8.9 million for the first seller, 7.7 million for the buyer. If you're looking for that trade now, speculating on what we know is coming next, this is what I would look into. Kaldari Navy Hookbill, buy below 8 million. Then we get the allegiance system that comes in, and all of a sudden, for some reason, the Galente shine, and then this price goes up. That is, I think, a possibility. Let's see if Galente is expensive, though. That's very important, and it is not. So that is really something to keep in mind. Here is Federation Navy Comet, 9.9 million to 7.7 million as well. Buyers below that 8 million range too. What this to me means is that basically with the expansion, this has opened up the spigots. There's a lot of LP, a lot of potential to make all of these faction warfare ships across the board, and it is being done, so that does mean quite a lot of high activity. But then what I'm thinking now is that, of course, if they're opening this up to everyone, they can't make it completely unprofitable for players. This just means even more rewards coming in, which also potentially means even lower prices. Very difficult gamble to take. The chart looks really nice, but we don't know what's coming next, so it's gonna be interesting. Next we've got the Imperial Navy Slicer settling at 10 million as well. Just below that for the sellers and 9 million for the buyers. Republic Fleet Firetail back to 10 million as well. So here I think it maybe happened a little bit. Look at that, volumes as we went below the 7.5 on the minimum prices. Someone said, yeah, I'm going to buy some Republic Fleet Firetails and bring the price back to a 10 million range. So here that's perhaps a little bit of trade speculation that's happening right there. Skybreaker is of course in a league of its own, not tied to a faction, 100 million to 85 million. So the same as the pirate factions. Crucifier Navy issue actually decently expensive, 18 million to 15 million, quite interesting. So that's a Mar. Then we get Griffin Navy issue, I think we'll see not too much here. 13.5 to 11 million, so I'm guessing it's just straight up popularity. And then here we go, Heron Navy issue. You're not gonna get a good chart because it was introduced right here in October, and we're talking 400 million, which is a completely different range from what we're at now. 9.9 to 8.8 million. I would say most of these faction frigates, here is the Imicus Navy issue, 9.8 to 8 million, have settled at prices just shy of 10 million. Is Magnate Navy issue, 10 million to 8.2. Molus Navy issue is an older model, 13.7 to 11 million, so slightly better and still down substantially on the chart, so became cheaper. Probe Fleet issue is at 9.3 to 7.7, and then the Vigil Fleet issue is, well, not at the 1 year low point, but definitely affordable, I would say, at 13 to 11.5 million. Very interesting. Now that I'm looking at this, I do wonder how CCP could fix that problem, and one answer is of course that if they can introduce, so how could this be profitable, right? And how can CCP defend the value of these Navy faction ships while increasing the amount of rewards that are potentially going to come into the game by opening up faction warfare to anyone, not just those that have chosen to take part in it through the through joining the right corporation or alliance. I would say, for instance, by gating off a lot of that new content to faction ships only, which is also something that they have done in part, I think, to the new faction warfare content there as well. So that is an interesting route. For instance, what could be cool? Faction Navy faction mining ships, and so you can't just take your Hulk or your Orca in there, but nope, you've got very specific faction mining ships that could really create a whole new industry branch, needing a lot of LP, needing a lot of those rewards to flow in there. That could then lead into actually higher prices for these ships here as well, especially those that are now at 1 year low point, like the Navy Hookbill, and I think the Navy Comet was pretty low as well, although starting to come back up here as well. So people are scavenging at the bottom already, but it is admittedly a risky bet, because one thing that we sort of know is going to happen is that the amount of rewards that are going to flow into the game should go up when CCP opens up with the new system. So it's going to be interesting, and I definitely do look forward to what's coming next for EVE Online. But admittedly, just like what we're seeing in most of the market, I have no idea which way the markets will react to all of that. So there we go, guys. That's it for this EVE Talk. Thank you very much for watching and listening, and as always, I'll see you next time.